All right. I think we're live.
Yep, I see it.
All right. Welcome back to Bitcoin.com's Token Narratives, where we discuss the biggest stories shaping the Bitcoin and cryptoverse. My name is Graham Stone, and I'm repping the low IQ bracket in the distribution of talking heads. I'm joined by news and research gigabrain David Sensel, which means there will be no mid-curve takes this week or ever. Bitcoin consolidating just below all-time highs. Currently, we are at $109,634.
Things are looking good.
Things are looking good.
So to start with, I thought we could begin with a little hopium. Not that we need it. Just the fact that we're kind of hovering around all-time highs is bullish enough. But it's always fun to have a little hopium. Before I get into that, though, I'd like to clarify what hopium is, and the reason that we call it hopium is very precise. We don't call it like bullish indicators or catalysts or something like that. It's hopium. And so last week, I think a couple people, one person in particular, got in our comments chastising us for maybe chart crimes or data that was, highly questionable. But that is the point of hopium. It's stuff that doesn't necessarily correlate well to future price prediction, but it is fun nonetheless to look at. That is hopium. Okay, so for everyone out there,
it's a portmanteau of the word opium and hope.
There we go.
Just for those unclear on that one.
Yeah.
So lay back in your opium den, light up your, I don't know, opium, and look up some charts.
Exactly, right? Thank you, Graham. A very important point. This is not very serious. Now, I think there is a little truth to it, so you can glean something from it, but don't get in our. I mean, you can get in our comments and go, actually, that's fine. But just realize we're calling this hopium for a reason. Okay, yeah. Hopium. Anyway, having described that, let's start with this BTC gold comparison. I thought this was an interesting piece of hopium. It's comparing the market liquidity and central bank holdings of Bitcoin and gold. And I believe the purpose of this table is to illustrate the opportunity that Bitcoin has to gain on gold.
We're early.
We're early. If you're a maxi, you would say overtake. Fine, fair enough. But just shows you the difference that still exists. So market cap between Bitcoin and gold, 1.3 trillion to 15 trillion. Daily trading volume, 30 billion versus 140 billion. I think the interesting thing here is then moving past the market and liquidity, you get to the central bank holdings. I think this is highly speculative. I'm not sure this cycle if we're going to see any central banks put Bitcoin on their balance sheet. I don't know what you think about that, Graham, but it seems highly doubtful to me. Anyway, estimated central bank holdings, 0 Bitcoin versus 35,000 tons of gold. And so there's $0 worth of Bitcoin held in central banks as far as we know. And there's about $2.5 trillion worth of gold held by central banks. So quite the opportunity. If you're a central banker out there, I think you'd probably be defenestrated if you put Bitcoin on the balance sheet right now, but go ahead, knock yourself out.
All right, what else we got on the hopium?
All right, here we go. Cash is trash. Of course, this is referring to the US dollar, and this chart is showing the year to date, I believe, um, change in the US dollar index versus every year since 1986. And if you look at the chart, you can see that we are at the lowest drawdown since that time. Um, the dollar has fallen the most since, I think, since 1986, maybe even before that. So this can account, of course, for some of the rise in Bitcoin's price versus the dollar. If you were to do this against the euro, it doesn't look quite as severe, and that reflects in the the Bitcoin's spot price versus the euro. But you can see that the dollar has weakened quite a bit, and of course, this is beneficial to assets like um, Bitcoin, gold, commodities, things of that nature. I would say the counterpoint to this. So there's hopium, but there's also a little knock on reality. Be uh, Historically, when the dollar performs really, really poorly, like it is now, there is a rebound, and the rebound often is quite severe. It's not every time, but it's something to be aware of. That, and I mean, and this is true of like any kind of long-standing asset, right? When you have moves that are very extreme and historically extreme, you expect the reversion to the mean to be fairly fast as well.
All right. What's up next? What do we got next?
All right, so I think one thing that I saw this past week, which is um, it goes to the question of who is buying Bitcoin. Now we've talked about this a lot on this show, um, and for example, I think maybe 3 weeks ago on Bits and Bips, is it named James Seyfert? He was
Yep.
talking to he was talking about how he got some information that a majority, or not a majority, maybe a majority of the ETF purchases this year have been from institutions and institutional level players, whereas last year it was mostly from like retail and sophisticated retail. So even within the ETF space, you've seen a transition to institutions and so-called smart money buying the ETFs. We've also seen this rise of the BTCs, the Bitcoin treasury companies. And so you have all these, probably the marginal buyer right now for Bitcoin are these kinds of folks, and they have been for quite some time. What about you, who's listening to this podcast, who's on crypto Twitter day in, day out? Um, are you buying Bitcoin? How are you positioned? And I felt like this poll from Crypto Calio, again, it's kind of anecdotal. I think this is this kind of supports how I have felt about the market and how I continue to feel about it. So he asked, what percentage of crypto portfolio is Bitcoin? So roughly 40% said 0% of their holdings is in Bitcoin.
Yeah, and of course the respondents here are crypto Twitter people.
Right.
Yeah, people who
12,000,
follow
almost
Kaleo.
13,000
Yeah.
people voted. So these are kind of hardcore crypto natives. They've stuck around for this cycle, at least. I'm guessing they're in the trenches, as they call it, as the young people call it, the trenches. I hate that word, but anyway, they're out there looking for gold amongst the shit coins. Anyway, 40% have zero Bitcoin holdings. Roughly 14% said less than 10%. 17%, 11% to 50%. And 50% of respondents said, sorry, 30% of respondents said that half or more of their holdings, crypto holdings, are in Bitcoin. Um, so a minority of crypto natives are holding a lot of Bitcoin. What do you make of this, Graham?
Yeah. I think this supports the other things, talking points that we've had up to this point, which is that it's the buyers of Bitcoin are institutions. And I would just say, anecdotally, I don't know about you, David, but zero normies have expressed interest to me in Bitcoin. Now, this may be because, they know I work at Bitcoin.com. I may have, I may have a tendency to, talk people's ears off if they start talking to me about Bitcoin. So maybe they're just avoiding the topic specifically to me. But anecdotally, zero normies have expressed interest in Bitcoin, in buying Bitcoin or whatever. Meanwhile, people who I know who hold Bitcoin, and like this includes me, I feel like are increasingly talking about how to lever up at this point. So like the Bitcoin insiders are like, it's going higher. The normies are just like not interested, and the crypto natives are trying to front run uh like alt season if that ever happens.
Yeah. So we've talked on this, I think, several times over the course of this year, but there's been reporting for the past year about how people who are kind of crypto natives, even sophisticated people like VCs and crypto VCs and things of that nature, they all they all pretty much missed the Bitcoin run up to probably around 80,000 or so, right? Um, they thought, this includes me, that Bitcoin, of course, will go up, but you want that beta to that going up, right? You want exposure to other assets that'll go up even more, and and so you've seen a lot of people, including myself, trying to play catch up, and thus far not getting basically uh, any catch up to Bitcoin. And I think you have natives in a crypto natives in a position now where, since they've missed so much, it's kind of like that sunken cost fallacy, but a little like inverse. They're like, well, I don't want to go in Bitcoin now because I've missed so
Yeah.
much. I'm gonna
Double
double down
down on
on
my alts. Yeah. Either
yeah, right.
that or yeah, just try to lever up on Bitcoin.
But if they did, then you'd think that more than 30% of them would have a lot of Bitcoin exposure, right? I feel like only 30% of crypto natives having half their crypto net worth in Bitcoin is quite small.
Yeah, I
And
think so
so
too.
I think to me, I just wanted to kind of game out what will happen from this point. So, for example, I every time that you see Bitcoin dominance start to kind of weaken or reverse, you get this just outpouring of alt season soon. Bitcoin dominance is rolling over. Here it comes, guys. Let's go. Here we go. And I think that's because it's cope, right? They want that's where all their bags are in alts.
Yeah.
Um, I wonder. I wonder. I was thinking about this morning. What happens if Bitcoin rips hard and leaves all these people on the sidelines again, and so then they have to FOMO into Bitcoin one last time,
Yeah. Yeah.
and that could send Bitcoin really really high, where the natives are finally like ditching their alt bags because they're like, oh god, this is just not going to happen. Um,
Yeah.
and I think that when if and when the crypto native becomes the marginal buyer of Bitcoin again, uh, maybe that's the top for
Yeah,
Bitcoin
interesting.
dominance.
Um, another interesting fact that I came across this week is that actually 55% of all Bitcoin currently has a cost basis above $90,000. Now, I don't know about you, David, but I was surprised by that. I thought it would be
That's high.
significantly lower. Yeah. So what this tells me, okay, is that you've had a pretty big turnover in the last, I don't know, 6 to 8 months of probably what's happened has like a Bitcoin OGs, people who've been holding Bitcoin for 5, 10 years, uh, they they they've been eyeing that 100K target for a long time. It's here. They've sold, like as we've seen this on chain, and what you have now is a new wave potentially of a new base potentially of long-term holders, right? They just got in at, 55% of all Bitcoin has a cost basis above 90K. So to me, this seems bullish because it means that those new holders, they're not going to sell when it gets to 110, right? That's not why they're they're looking for maybe the next target, 200K. So I think once this turnover is sort of complete, I think it leaves a pretty big gap to like the next psychological target.
Do you know what the other cohorts are? So this is 55% or above 90K. Do you know what the next biggest one is?
No, I don't know.
Yeah, because I mean, 55% is much larger than I thought, but 45%, if it's still significantly lower, they're going to want to sell. And again, those marginal sellers can make the price go down a lot.
Yeah.
And what I would worry about is, let's say that you have all these people who have bought at 90K and you start to see the price deteriorate sometime in the future. I'm not talking about now. Those 90K buyers are going to be very, very inclined to get out with something, I'd imagine.
Yeah.
Down the road,
So
right?
you could look at it both ways for sure.
Yeah, right. Because these kinds of things cut both ways. But yeah, I mean, I think 50%, 55% is way higher than I would think, and it is overall bullish, I think. Yeah.
Yeah. All right, so we're going to talk a little bit about the Bitcoin ossification debate, but before we get into that, I just want to go to do our sort of obligatory BTC roundup. And again, what I mean by BTC is not Bitcoin, but Bitcoin Treasury Company. So as we've talked
So
about many times, yeah, go ahead, David.
the way I distinguish this, I don't know if this is clear to the audience or when I write, I add an S to that, BTCs.
Oh, okay,
Because
nice.
right, just because that helps a little bit so that they know they're not confused.
All right. So as this is becoming a sort of recurring segment on the show, I've gone ahead and prepared a little jingle, which I'll play here to intro this, just for your entertainment purposes. It's the Bitcoin Corporate Treasury Roundup. All right. So
I like it. I wish
here we go. Here we go.
I wanted to hear a lyric.
It's the Bitcoin Corporate Treasury Roundup. Did you not hear that?
No, I wanted to hear like a full verse. Like I was waiting to hear.
Yeah.
Anyway,
I only generated 12 seconds. Sorry.
Yeah,
We
that
might
was
have
good.
to flesh that out for next time. All right. So let's get into it, because as usual, there are quite a few BTCs. All right. Starting up with Cardone Capital. So this is a real estate mogul, and he's got a company, Cardone Capital. They added 1,000 BTC to their balance sheet, and they're combining their balance sheet now, Bitcoin and real estate, saying like those are the two optimal assets to hold on your corporate treasury. We got Figma, the like awesome design software. They revealed that they have been holding $70 million in Bitcoin via the ETF. That was revealed in their IPO documents. So yeah, Figma's looking at IPO. They have to reveal their documents. Sure enough, 70 million Bitcoin on the balance sheet. Trump, Eric Trump. So the Trump backed American Bitcoin, it's called. It's a crypto venture firm backed by Eric Trump. They've raised 220 million from private investors to purchase Bitcoin and mining equipment, with plans to go public via a merger with Griffin Digital Mining. Smarter Web Company, that's the big UK one. They added another 773.5 Bitcoin, bringing their holdings to 230. And it's all part of their ongoing 10-year plan. I don't see any numerology in this one, which is kind of refreshing. It's good.
Yeah.
Sailor, of course. Yeah. Sailor. Added another 5,000 Bitcoin in his latest buying spree. Just a sec. Looking at bitcointreasuries.net. That MicroStrategy. Oh, what happened? Here we go. MicroStrategy now has almost 600,000 Bitcoin. What else we got here? Blockchain Group. So this is a French company. They confirmed the acquisition of 60 BTC, bringing their holdings to 1,788 BTC. Just a couple of more here to round things up. We got, this one was mentioned, I think, a few weeks ago, the Spanish coffee chain saying that they got approval to do it. They actually did do it. They've got a 1 billion euro Bitcoin purchase strategy. So yeah, this falls in the zombie company category. A company that's not really making any money. They're putting Bitcoin on their balance sheet. And yeah, Metaplanet have kind of messed up their numerology. They were holding 1, 2, 3, 4, 5 Bitcoin, but now with this purchase of 1,005 Bitcoin, they're at 13,350. All right, so that's your roundup for the week. Thoughts,
I
David?
bet you though. Well, first of all, in the Metaplanet numerology, I guarantee you they're setting up for some future number, right? It's got to be, because it was 105. They bought 105, and I saw that headline. I was like, definitely they know what they're planning to do, some kind of weird number thing, guaranteed. Just another note on the Metaplanet one. They are on Metaplanet this week. They also issued 0% bonds, ordinary bonds.
So we're at 0%. There we go. We've hit the 0% mark.
So I did a little research on it, and Strategy has also done this 3 times. Once in February of 2021, then in sometime in 2024, and then again in February of 2025. So they've done it 3 times. Metaplanet has now done it once. So I imagine some of these other companies, once they get their MNAV up and their market cap up, they'll probably do the same, right? They'll issue 0% bonds. And then, like we said, when they start issuing negative yield bonds where the investor has to pay to own the bond, that's when we'll know we're kind of in the final phase of this thing. So something to watch out for.
No, and I think the real question at the end of the day, as it relates to like the price of Bitcoin, is will these companies end up having to spit out their Bitcoin at the end of this? Like when, their stock prices tank, and are they going to be forced sellers and have to spit it out at the end? Kind of like, it has happened before. I think like Genesis, Grayscale type, like they contributed to the buying on the way up, but they also reflexively contributed to the selling on the way down because they had to spit out the Bitcoins that they had accumulated.
Yeah, I mean, it looks like MicroStrategy and maybe Metaplanet won't have to do that, at least not right away, because they seem to be structured very well for when like the bonds are due and all this kind of stuff. But I imagine there's going to be so many of these copycats that are not going to be as well financially engineered that they definitely will do that. Graham, you'll definitely see it, and they'll become somewhat of an indiscriminate seller, right? Like Germany was last year. You remember when Germany just is like, we're going to market sell, what was it, 3 billion of Bitcoin or something like that?
Yeah.
So
pretty big own goal there for Germany, because that was at around 50, 60K, I believe.
Something like that. Yeah. Ridiculous. Yeah. But also they didn't sell it smartly. So it was doubly stupid, right? They just kind of sold it in a dumb way.
Yeah. All right. So let's get into a narrative here, a growing narrative in the Bitcoin world, which is around the ossify or upgrade, and around what to do with Bitcoin development. So there is a mostly quiet from my perspective. I don't know, like I don't follow it that closely, but I do hear. I have heard in the last month or two more and more people talking about this. So it's kind of a debate, a war going on in Bitcoin development. So on the surface, it looks like it's about two pieces of code. One is called CTV, and the other is OpCat. But I think if we like zoom out, what it's actually what the real narrative here is whether Bitcoin should ossify and preserve what works, or should it upgrade and possibly risk opening the door to Ethereum style complexity and like the biggest fear of a lot of people, like a shitcoinery, I guess. So let's just look at a little bit more closely at these two opcodes, these two like upgrades. So one of them is CTV, check template verify CTV. So this is the simpler of the two, and it it can enable things like vaults. So we can talk a little bit more about that later. But vaults, like they enable you to have sort of a deterministic ways to hold your Bitcoin. So it can help you with like self custody. Like if this happens, if somebody, uh, if you, what's the best way to describe this? Like kind of like a dead man switch type things can preserve the like can help you with inheritance, prevent against hacking, things like that. With CTV, there's also the potential to reduce congestion on the network and also to enable more scalable layer twos. Now, the other one, OpCat, is more expressive opcode, and it allows this thing that's called string concatenation in Bitcoin script. So it's a gateway to another sort of hot word here in the space, which is recursive covenants. And then also it's the sort of a precursor to BitVM, which is a sort of primitive virtual machine for Bitcoin. Now, they are both being pushed for activation, but CTV, the less complicated one, is being framed as like a safe first step, while OpCat is, the critics are saying that it could introduce risks, unknown risks, shitcoinery. So, any comments here so far before I go a little bit deeper?
The only comment I would say is it's a testament to so a positive comment would be it's a testament to the fact that there's a debate now between these upgrades at all. Whereas I think like a year ago, the fight was more on should we even do this? Should we even be talking about these kinds of upgrades whatsoever? And so it has moved. The discourse has moved. The Bitcoin community has moved. It feels really slow compared to the rest of crypto, but there is progress. And then like 2 years ago or 3 years ago, I think this kind of thing was being talked about in very small circles, but there was no appetite for it whatsoever.
Yeah,
So just on like,
and
yeah.
absolutely. And an interesting development here in the last few weeks was this open letter, which was created by some former core devs. Like one of the signers is this guy, James O'Byrne. And there's 60 people signed this, and they sort of like they sent it to the like the they published it somewhere like for debate. All right. Now, this open letter is basically so for a while, um, the main debate has been about should we implement OpCat, and it got a little bit heated. There's strong opinions on both sides, and then this open letter just a few weeks ago came in, and they said, "How about this? Let's do CTV. Let's just get that one through first. And so I think this, to your point, David, it's a signal that something can happen in Bitcoin, and like it's it's a good first step, right? Let's get this one
Yeah.
through first. It's simpler, and then let's see what happens after that.
And just one more comment, kind of on the meta level of these different factions and how it's difficult to get I think the Bitcoin community, the core Bitcoin community, motivated to make changes. Um, whether you love them or hate him, Udi and was it Eric Walls, they with their opcat stuff and their what's it called, the Taproot Wizards, that kind of stuff. I personally find it a little, I don't know, kind of annoying, I guess, but it's very effective at galvanizing interests and attention. And so I think you have to give them a lot of credit for pushing this debate forward in the past year.
Yeah, absolutely. And I mean, you could say that actually, like their efforts. It's kind of like that with Trump. So you throw out something crazy, and everyone's like, "Oh my god!" And then you end up with something like reasonable, which might be CTV to start. That seems reasonable by comparison. All right. So yeah, I mean, it's just interesting to see that once again we might actually get some upgrades in Bitcoin. It's interesting to see how the debate is happening. And yeah, like as everyone knows, there's no formal way to decide upgrades in Bitcoin. It all depends on this broad consensus. There's a lot of politics, minor signaling, sort of community vibes, and
Centralized
it's kind of
exchanges showing
yeah,
their support as well because they're such
yeah,
huge holders of people's
absolutely.
Bitcoin.
So a lot of players, and everyone sort of has to get on board with this. So yeah, we'll keep following this story, but yeah, very interesting to see.
Let me ask you a question, just because I brought it up a little bit. What are your views on like the Taproot Wizards and the Opcat community? Is it just not like
Yeah,
on your radar at all? Because it's kind of on mine a bit, and I just on a personal level, I
yeah,
appreciate what they're doing, but I just don't like the aesthetic, and it's kind of annoying.
yeah. No, I like. Recently, I've been thinking. Um, yeah, is there a risk that if you start having kind of weird stuff like ordinal, uh, NFTs on Bitcoin, does that cheapen Bitcoin? Does that make it look less serious to institutional investors or like central banks or whatever, like the next big wave of people who are want to get involved in this? Like, is there a risk there? And I don't know. It does seem like that could be a risk. So that's how I've been thinking about it recently.
Hmm. I interviewed Jeff Garzik at the Bitcoin conference in Las Vegas, and I might be wrong, misremembering, but he kind of said that while he might not particularly like the NFTs thing on Bitcoin on a personal level, the fact that the chain is uncensorable and you don't have to ask anybody permission to do stuff with it, so they can just do it, right? You can
Yeah.
post these images to the chain. He said that's important. It's really, 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 really important. And
Yeah.
it's proof. It's proof of the kind of immutability and uncensorable nature of the thing.
Yeah.
So
And I mean, I think that's also at the heart of the debate as to whether to integrate these opcodes, these new like upgrades, right? Is you don't it's really hard to predict what will evolve out of it, right? Like with Taproot, I don't think that many people predicted that it would turn into ordinals, right? They thought they were upgrading for something else, but because like it has this, like, the code made it possible, people did it. And so that, yeah, that's the risk. I think that's what people are worried about, is they're going to like implement some new code and it'll lead to something that could damage Bitcoin in some way.
Where do you fall on this in terms of like be conservative and ossify
Yeah.
and be a
Yeah.
little more
Yeah. No,
on the
like
spectrum? Where would you put yourself?
a year ago or a year and a half ago, when there was when this ordinals thing was coming out and Bitcoin was like half the price it is now, I was definitely more in the let's innovate like camp. But recently I've been feeling like, yeah, just more conservative. Like it ain't broke right now, so no rush to fix anything.
Yeah. I so again, I've been saying the same thing for a long time, but if you look at right now, for example, if you look at the mempool and like the transactions, there
Yeah,
I think someone posted earlier this week, like there hadn't been any
most of the blocks are
transactions.
empty. Yeah,
Most of the blocks are empty right now, and that is not
yeah,
a good thing. And it it's a very bad thing actually, because the security budget stuff is looming, right? It's not
yeah,
an issue right now, but it's going to be. And
yeah,
the way that a lot of these Bitcoin maxis and even like BTCs, like I would put Sailor as number one on this stuff, is like hold your Bitcoin, don't spend it. You're an idiot for spending Bitcoin. Don't use it, kind of thing, right? You see this; it's
yeah.
like everywhere nowadays. This is probably a bad thing, a bad way of looking at something that needs to be used. I think. I don't think Bitcoin can survive on the a store of value digital gold narrative alone. Um, and and since that's what it's riding on completely right now, is that the number will go up, and you should invest in Bitcoin, and you should take all the money in your company and not innovate and do something that will make the world a better place and add more efficiency to the world. You should just buy Bitcoin and do nothing. Should basically become like a what's it called, a rent seeker. I think that's a terrible thing for Bitcoin, and obviously a terrible thing for the world. But anyway, I digress. I I don't think you can. I don't think it's tenable for Bitcoin to have a blockchain that basically sits unused forever. So right now, I agree with you. As the numbers going up and adoption is increasing at this kind of rapid pace, it does feel like you can kind of rest on your laurels and be like, ah, we don't have to do anything. We're
Yeah.
here. The promised land is nigh. But I don't think Bitcoin has won, and I
Yeah.
think it's way too soon to call them the winner.
You definitely have to be careful of obviously like introducing unknown risks, but there's also on the other side, right? If you introduce something that's kind of exciting that can improve Bitcoin in some way, like that could be huge, right? That could bring in a whole new waves of people that could like bring Bitcoin into the like top of the news headlines, and all of a sudden you just have like new waves of buyers. So like it could be really good for the price of Bitcoin as well.
Exactly. But I mean, I'm really looking forward to seeing what happens with these Bitcoin L2s and side chains to see if they can actually bring some transaction volume to the main chain. We're going to get into this, I think, next or in a little bit. But if you look at what's happening in the non-Bitcoin space, the altcoin space, with respect to L1s and L2s, um, it does seem to be the case that the the chain you're on um, is the chain you're on is mattering less and less, and that and so this also is applicable to Bitcoin. You'd imagine that, like looking at Ethereum, where the L2s don't really bring any value to the L1 thus far.
Yeah. Yeah,
This has got to be a concern for Bitcoin people, and
absolutely.
because if one of the solutions to the Bitcoin security budget problem is L2s and sidechains are going to bring transaction volume and value accrual to Bitcoin mainnet. That's hasn't been the case, and it might not be the case. It just might not be the case
Yeah,
in general.
exactly. You definitely don't want to replicate what Ethereum has done with their L2, like their parasitic L2s, and none of the value accruing back to Ethereum. You definitely don't want to, yeah, replicate that on Bitcoin. That would be bad.
But it could also be the case, Graham, that just in general, it could be the case that like from a game theory perspective, L L1s don't accrue value, right? Like on a fair playing field where you have infinite L1s, right? You can spin up an L1 in a minute, and infinite L2s. Why would any L1 accrue value over another L1?
Yeah.
Um,
So yeah, let's get into that. I mean, that has been a thesis for a long time, the Fat Protocol thesis, right? That a couple of these L1s are going to be accruing tons of value, right? And we've seen this in the last two cycles. The L1s have done the best, but I think as you're going to try to explain here, David, that thesis is dying.
yeah. So this is for those of you who are not familiar with this, the Fat Protocol thesis was kind of articulated in 2016 by this guy named Joel Monegro. I don't know if I'm saying that right. He described it in a post called Fat Protocol, Fat Protocols, I think. There it is. I encourage everyone to check it out. It's a great read. It was kind of revolutionary for its time, and it really the shaped narratives from 2016 to the present, right? So um, the basic idea is that in Web 2, you saw clearly that the application layer, your Gmails, your Googles, your Facebooks, things like that, they captured overwhelmingly the value of the internet, and the protocol layer, uh, which you could categorize everything from like ISPs, internet service providers, to the actual physical infrastructure, like in America you have Comcast, and um, I don't know what do you have in Canada? Who provides like the cables and stuff?
I don't know, man. I don't know what's going on in Canada, but fiber optic cables,
Yeah,
on seabeds around the world,
yeah.
they they certainly make money, but they don't print money like Facebook and Google.
They're in a total separate category, right? Like
Yeah,
they're laughably small.
they're like
Uh,
a commodity. I mean, like
yeah,
the
exactly.
margins are small on those, right?
Yeah,
You can make
and
money. It's a
again, like
business,
yeah, they
but
make a lot of money. They're big companies, but they're not in the same league as like
yeah,
Facebook and Google. I mean, get out of here. Anyway, then you have things like also at the protocol layer, you have things in Web 2 like HTML or TCP/IP, right? This is the technology that the internet runs on, things of that nature, and that accrues nothing, right? Those get no money. They were just kind of open source software, basically. And so the Fat Protocol thesis for Web 3 or crypto, whatever you want to call it, is that this time around it's going to be different, and that protocols, because of you can have tokenization and things like that, protocols are going to be able to capture uh, most of the value in the stack. Your Ethereums, your Bitcoins, your Solanas, right? These are protocols, networks that also have a token attached to them. And so the idea is that since you're going to have all this traffic and activity on these networks, that the token itself will be able to um, capture most of the revenue, and the applications themselves will be generating money, but a much smaller percentage than
Yeah.
before.
Now this theory, this thesis, never really made sense to me, to be honest. Why would ETH, for example, accrue value when you just need a little bit of it to get things done on Ethereum? And it's just like yeah, like doesn't make it never made sense to me. But the what actually so that's why I under allocated to protocols back in like 2018 or whatever. And but what actually happened was everyone looked at those assets, I don't know, like a Shelling point or something, and they just like accumulated them and they all went to the moon. But that
It was a
seems to be
narrative.
unraveling now.
It was a super duper strong narrative. You have this new paradigm, Web3. You have this new ability to. So I was sucked into it personally. I didn't, but you have this new paradigm where protocols and technology itself, seemingly, right? Ethereum is in some ways just like, it's like HTML or TCP/IP with a little physical infrastructure attached to it. Can now can now be kind of financialized. And so, yeah, it was new. And in here, to your point, Graham, uh, the number went up. And because the number went up across the board, that was kind of the evidence that the thesis was right. Not maybe
Yeah.
it wasn't like to your point, it wasn't maybe in your mind, and I think you're right, logically consistent or correct, but the number went up, and so that was the proof that the fat protocol thesis was right. And
Yeah.
and it went up for two cycles, right? It went up for
Yeah.
2017, and it went up bigly in 2021, right? When all the
Absolutely.
L1s, all the L1s started coming out. And so this was kind of this is the way I think the consensus view of Web3.
And
Fast
it
forward.
seems that
Okay, go ahead.
yeah, it seems that that consensus view is, yeah, fast forwarding to now, like wrong. We were right all along, man. Uh, but yeah, we were too early to being right, I think.
Yeah. And so what you've seen is, I think, a number of things happening. Now, number one is the price stopped going up, right? Like across the board, all these L1s and L2s, and their associated token. I think a couple of weeks ago we showed this, but you can show it again if you want, from TXMC. Just all these alt ones tokens. It's been like number go down for years. As you can see there, there's eight tokens. That's one post, and then he has a second post in it, right? And what's what's going on here, right? So the fact that the price is kind of been going down for a while is like your first indication that, wait a second, maybe something's wrong with this idea, with this thesis, right? And so then you're trying to explain what's going on, and we've seen that for the past year and a half, I believe, um, of trying to explain this phenomena, what the market is telling us. And I think there's a number of things that explain this. The first is that the technology now is so good and so streamlined. You can you can go to websites and click buttons and spin up your own L1 or L2 in like 10 minutes. Full L1 L2s in like 10 minutes. So the cost of making these things is going to zero. It's already close enough to zero. And so you can basically have infinite L1s and L2s. And then you have to think about, well, why would the token associated with it um, be worth anything, right? Yeah, and where's the value accrual in that? Um, and you see that this ties into another narrative which is growing, which is that proof of stake has been way overplayed in terms of the yield that should be provided to validators. Um, it should be like really minimal. because you can get quite a lot of security for very little incentive. And so these L1s have just been um, bleeding their value to, like, I believe, was it Hasib, the Dragonfly VC guy, was saying that like something like 12 companies represent most L1 and L2 validator sets. And right, and they're just yield. They're getting all this yield from their the staking services they provide, and then they just dump it on the market, down, 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 down it goes. Um, and what else do we have? So this ties into the kind of the growth of the revenue narrative that we've also touched on quite a bit. And uh, the idea is that you have a token that is directly benefiting from the value accrued to that project. These all happen to be applications, right? These are application based, and the applications make real revenue, and then they directly tie that revenue, some significant portion of that, to the token itself, right? So all of
Yeah.
this to say, go ahead.
Eh,
I've been rambling.
no, I was just gonna say, like, there's something fundamentally broken about the whole model, right? When you have a layer one, and in order to use it, you have to spend some of the native token. Uh, let's talk about ETH. Okay, so that would be demand for the token, right? But it's in like Ethereum's best interests to lower the price of a transaction, because if they don't, people are just going to move to another chain where the transactions are lower, where the transaction costs are lower. So on the other hand, right, if the if the cost of a transaction is high on Ethereum, they make money. Like the Ethereum value accrues to the chain, but people will just leave the chain and go somewhere else. So there's just a mismatch of incentives. While for applications, it's a bit different, I think. So like the incentives can line up more uh, synergistically with the project.
Yeah, and I think the key point here is that uh, these, like you said, these protocols, they're providing infrastructure, and so they're competing with each other on the price of compute, basically, right?
Yeah,
And so that's going to trend towards zero because that's
yeah,
what they're competing on. um, and so yeah, it doesn't necessarily make sense for the token to be more and more expensive
yeah.
if their costs are going down lower and lower. I mean, obviously, you can say that they get more volume, maybe, and that's something that happens. But
Well, the argument has always been that the native token has a monetary premium, right? But when you have Bitcoin providing that already in the space, like it's the monetary asset, it's just really hard for tokens like ETH and Sol to gain that monetary, to like maintain that monetary premium, when they're all they are is just like the fuel you need to get the thing done in your blockchain. And then not only that, but now it's becoming like easier and easier to just to abstract away. Okay, you don't even really need gas. You can pay your gas in a stable coin, and like it gets done on the background. Why would I need to hold the native token of the protocol?
yeah, also, but just to note though, Solana has been very consistent, and the leadership in Solana have been very consistent that Solana has no monetary premium, and that they reject these ideas of Solana having monetary premium. So I think
Yeah.
they've been pretty consistent, at least most of the Solana leaders, about that. This is not the case for Ethereum, right? with like the ultrasound
Yeah.
money meme and all this kind of stuff. So I agree with you. There are some people who disagree on this, and they can have a point. Like, for example, it could be the case that if that you could have a monetary premium on Ethereum if it's just like Bitcoin, it's just more trustful. It's much less centralized. I think there is a case to be made for that, but I don't think Ethereum has really earned that at all yet. Right? It's far less pervasive than it used to be, and it's really having to fight off
Yeah. And
other major projects for that.
it also made a lot more sense for Ethereum to have a monetary premium when more ETH was being burned than was being issued. But now that that's not the case, thanks to all these parasitic L2s, you're like, how does ETH have a monetary premium when it's just sort of getting inflated away gradually?
Yeah. And it also looks like the case that these L2s, like for example, Robinhood announced that they're going to make an L2, Ethereum L2 this week. But I don't think anyone that at least that, okay, there's maybe one or two people I followed who thought this was necessarily really good news for Ethereum. The
No, I don't
main
think
net.
anybody thinks that. Yeah.
Yeah, right. Because it was,
Everybody knows that Ethereum L2s don't really help Ethereum.
yeah. And also I heard like everyone knows that they could pick up their ball and move to another chain
Exactly.
easily, right? Like
Yeah.
if they get a if Ethereum mainnet suddenly starts make some protocol changes where they have to they'll start taking like a decent cut more directly, or like they make the price of blobs expensive, or whatever they do to basically kind of extract some of the value that Robinhood's L2 is going to accrue. They can go to a Solana,
Yeah.
right? And
The
they're a
incentives
big
are all wrong.
company. Yeah, they're a big company. It's not that going to be that hard for them to spin up something on Solana, whether it's mainnet or a Solana L1. So yeah, it does seem like this, at least for now, this fat protocol thesis, I think is is kind of dead.
It's finally been disproven.
Yeah.
The veil
The
has
other
been lifted. The hypnosis is over.
the other big thing I would say, Graham,
Bring on the
is
applications.
exactly. This is the last point that I think is really maybe the most important thing is from 2016 to basically like 2023, maybe even 2024. You could really say it was easy to excuse the lack of applications. You could be like, don't worry, our infrastructure is not there yet, right? We need more TPS. It has to be faster.
Yeah.
Gas has to be cheaper. Once we get all this done, you're going to see tons of users coming in because we're going to have like all the applications that you have in Web 2, except it's going to be on Web 3. And what you've seen is we have all that now. We have the tech is in a great place. The infrastructure is in a great place. There's no users. There's no users for this stuff, right? Very little users because in general, if you're trying to replicate Web 2 applications, then you're just going to use Web 2 technology. You don't need a Web 3 version of this stuff for most things, right? And so I think I know you and I have talked about this a lot. Like where are the Web 3 applications, the native Web 3 applications that you can't replicate in Web 2 that you need to have this tech stack to do? And so there's been, I think, a growing chorus of like applications, applications, applications. We need these things to really bring retail in a meaningful way.
Yeah. All right.
Wait, can I
Should
just
move
do
on to
one
our,
last thing?
yeah. Yeah.
One last point. So the the last piece of this really is how this connects to the revenue narrative that is I think heating up, and it's been interesting to see how this revenue narrative started off a little slowly. really kind of picked up with Hyperliquid, and then Hyperliquid advocates got really annoying, and so you just saw this kind of, I would say, natural pushback, uh, and how and you've seen this kind of back and forth about this revenue narrative is just the new hot thing. It's going to blow over and it'll be replaced with something else. Um, but I do think though that this narrative might be more than just a narrative. It might, I think it's going to be a shift. I think it's a full on shift in terms of where the focus is and how projects moving forward need to make money. And I there was
Yeah.
a really good
It's like the
post by
most
Gord.
obvious thing in the world.
I know, I know,
Like
I know. It's crazy to say, but in crypto, it's worked. It's worked for 2 cycles. It's basically worked for 10 years, right?
yeah.
You do any kind of infrastructure, you do kind of any kind of project, and you throw a token attached to it, and you make $1 billion, right? And you don't need to.
Yeah.
It's
So
it's pre revenue,
this is
right?
this is bullish. I think that that era is finally dying, and now you actually have to have product market fit and a way for the token that's associated with the project to accrue value because of that product market fit, just like every
Yeah,
other company.
it's it's so
Uh,
funny listening to you say that. It's just
like that's awesome. That if let's like, come on, when like, where's the next Hyperliquid? I got my eyes peeled, and
yeah,
I hope to be able to invest in it.
yeah. So okay, sorry, two more points, not to belabor this, but again, the important thing is that this is not just some kind of like cotton candy narrative that's going to deflate soon or anything like that. This is hopefully a real shift. Number one. Number two. So Flood, he's like kind of the biggest KOL cheerleader for Hyperliquid. Really good follow on X. He also this week said basically what we were saying, right? Like you need to have an app. It needs to do something real. It needs to have real revenue. That revenue needs to demonstrably go mostly to the token directly. Um, and he was talking about the same kind of thing, L1s and L2s, and how they're kind of worthless and they're going to zero. And someone in the comments asked him like, well, you're this big Hyperliquid cheerleader. What's your view on Hyper EVM and their L1? And I thought his answer was really really good. He was like, I don't care about their L1. He said, I care about having basically like equity access to the best um, exchange in crypto, which is an app. And he said that's what I'm focused on. And I thought that was a really good answer because it's honest, right? Like maybe the Hyper EVM and their L1 stuff, maybe it pans out, maybe it doesn't, but he sees the application, this one application, as being very very valuable, and so that's what he's focused on. Anyway, so um, yeah, that's it.
All right. Okay, so we've already been at it for an hour here. Do you want to get into the third big topic of the week, stocks on chain?
I think so. I think we should at least a little bit.
Yeah, yeah. So that's the, I don't know, one of the big. Maybe it's the third leg of the stool uh, for this cycle. Like we've got just like Bitcoin treasury companies, people like just Bitcoin. All right, Bitcoin's awesome. Whatever, the US dollar is trash. Uh, Bitcoin's gonna like overtake gold. Yeah, okay. That's one of the big stools of this cycle. Three, one of the three pillars. Okay, the second one is stable coins, the whole stablecoin narrative, and the third is stocks. Right, the like stocks on chain, and we saw that Robinhood, and not only Robinhood, but there's quite a few entrants, I think, in the uh, tokenizing stocks game. But Robinhood is huge, and they are now offering stocks that are on chain. You can trade them on chain.
Yeah. I mean, right now, I think currently, right now, technically they're not stocks, they're derivatives to stocks, but they're looking to change that. It's just because of regulation and all that. But yeah, you saw this week them Robinhood talk about this. They rolled out onto Solana via what's it called X stock, Kraken, and I think one other exchange, maybe Gate. I can't remember. So yeah, you saw this. Now I am a wet blanket, and so I naturally side with those who see this as not a big deal, at least currently, and maybe for a long, long time, not a big deal. And why is this not a big deal, right? First of all, the way that this is working currently is very, very inefficient and um, kind of just bad, right? Like these aren't traded 24 hours a day. I mean, so you can trade these tokens 24 hours a day, but the price that they are tied to is basically only during uh, the actual U.S. trading hours. So, for example, if you trade these tokens after U.S. hours, the price can change. But in the morning, when the stock market opens up, the Oracle updates to whatever when you want to sell it in the morning. It updates to that the price that it is on the exchange on the stock exchange, and so then you can eat you'll eat you don't get to realize that gain if you make a gain during outside of those hours. This really limits how useful it is for traders, right? Because there's basically no reason to trade this off hours, really, if you ever want to like realize your gains uh, during that time. Um, you have to KYC, of course, to mint or redeem this kind of stuff. The liquidity is low. Um, the the what's it called? Redemption fee is quite high, 25 basis points. Um, and so then you get into who is this for with all these kind of limitations? Well, it's definitely not for people with a lot of money, right? Not for market makers, because the risks that I just outlined are way too high to ever put size on any of this stuff. Um, so it's not so it's and then it's obviously not going to be for professionals. It's not going to be
Yeah.
for boomers or people
Yeah.
who have access to the stock market. And one last point.
David, go ahead.
One last point. So you say crypto natives. Crypto natives are notoriously short time frame, short term traders. They're not going to trade something like this because you can't really trade it in a short time frame.
All right, David. At the start of this podcast, I promised there'd be no mid curve takes, but you're mid curving it.
Okay.
Tokenized stocks, bro. Like, come on. Whatever this is, whatever
Uh,
Robinhood has right now, it's V0. But end of the day, stocks will be tokenized, and we're gonna do away with this antiquated system. There's like some building in New York, the Depository Trust Company, where they like have like I don't know, like mountains of paperwork trying to figure out who owns what stock. And apparently there was a flood there not long ago. And like it's digitized. That similar things exist in other capital markets. Euroclear in Europe. The Japan has the Japan Securities Depository Center, and all of these ledgers are going to eventually be replaced by a much better system, and it's going to be on blockchains, tokenized stocks. They've been
I,
doing
I
pilots for years
I
towards this, and
agree.
it's gonna happen.
I agree with all of that. What I'm saying though is you need some big key pieces before this is kind of
Yeah,
usable by
this
anybody. First of
it's
all,
an
like I
early
think
version.
Nasdaq, I think they said maybe next year by the end of 27 they'll have 24 hours 5 days a week trading.
Yeah,
That's going to be a big one, right? But
yeah,
again, it's going to happen so slowly, right? They're rolling this out in like a
yeah. It's
year and a
not going to
half or
happen right
something like that.
overnight.
Yeah,
Yes,
but
exactly. But let's not lose sight of the big picture, right? Once stocks are tokenized, you're going to be able to use them in DeFi. They'll be composable in DeFi. Things are going to be so much easier. You'll be able to just like get airdrops of your dividends. It's going to massively improve access to stocks all around the world if we can figure out the KYC issue.
Yeah.
Yeah.
I mean, again, I think it's usable right now if you want to invest in these companies for like a medium to long term, basically.
Yeah.
But then you're not going to do it in size because the people who want to do that are just going to do it directly through a broker, you know? So
Yeah.
anyway,
So it's the first adopters are just going to be like, I don't know, morons like me who don't know, who don't have a brokerage account and are like, oh, I want some Apple stock.
have you bought any stock yet?
No, I've never owned a stock in my life.
No,
But
I'm saying
if
of these tokenized stocks, have you got on Solana and bought some? What do
no,
they have, like
so
Tesla?
like that exists now. I can do that now.
Yeah,
So
you can do that
yeah,
from this week. You can
I'm
go
gonna
on
look.
and do that.
I might look into that.
Yeah, yeah.
I might have to start
So
like paying attention to stocks.
yeah, exactly.
Maybe I can
Again,
get
yeah,
some of those BTCSs.
yeah. So that's what I would be interested in a lot,
Exactly.
especially though in non-US markets, right? That's where I would. The thing is though, everyone else is too slow behind this. This is not going to roll out in like other markets for a while, but it would be great to be able to pick up like Argentina's first BTCS, right?
Yeah.
Um,
Yeah. Exactly.
Again, though, I think this is something to be excited for, like next cycle, right?
Yeah.
But
Yeah.
this cycle, it's kind of like what does it remind me of? Um, it reminds me of some of the like the IoT frenzy
Yeah.
projects in like
Yeah. Yeah.
2017, right? Like
Yeah.
just way too early for any kind
All
of.
right. So it's not the uh third pillar, the third leg of the stool for this cycle.
I would say revenue.
Fine.
Revenue coins are the third pillar.
Okay. Stable coins, revenue tokens, and just Bitcoin.
Yeah. Yeah.
All right. I'm down with that. Any last thoughts?
Yeah, I just wanted to say I finally sat down. I carved out some time this past week, um, from work, from work. Yeah, it was real work, but I carved out some time and I got on chain again and like dug in deep to some of this stuff that I've been, you know, writing about and reading about and paying attention to, but hadn't actually used. And it was really nice to get in and move some things around on chain, go through like the leading protocols and some of these new projects and products. And I have to say, I was kind of surprised at how snappy and effortless it all felt. It just really does feel like it's really coming together kind of
It's
quickly.
coming a long way. Absolutely.
Yeah,
Um,
even from like
bridging is so
six to
much
eight
better
months ago.
now. Bridging
Hmm.
is so much better now than it was, even 6 months ago.
Yeah,
Shout out to Debridge. Like
I
their
love it.
product is really good. Yeah.
Yeah, so it made me feel really. Um, I felt impressed, to be honest, more than anything. Like, that was pretty good, and it does make me think though. Like, man, we are right. We just need like two or three or four really good applications, and I think you could see like retail just pile in of its own volition, not from a speculative side per se, but just because this stuff is good, and you could imagine like some retail friendly applications that do revenue a revenue share model where you basically like Hyperliquid, but you get to own a piece of the company via the token, and it's a real thing, like a
You
Roblox or
mean
whatever it is.
you mean the dream of like crypto since
Yes,
2017, like since
yeah,
I got into the game. Like
exactly.
that's what I signed up for. But instead I just got like I don't know, fat protocols, whatever.
You got
That protocol.
you got like $100 gas in
Yeah,
2021.
exactly. All right.
But anyway, so for those listening who like, I feel like I'm in the space quite a lot, and I kind of obviously deal with the stuff every day, but you just maybe lose time to get into to the nitty gritty. I encourage you to do so. Bridge to a new chain. Check out the top applications on that chain. See how responsive it is. And yeah, was quite impressed and made me very kind of optimistic going forward in general.
Yeah, nice.
How about you?
All right, let's wrap it up there. Yeah, that's a good way. That's a good closing thought. So positive from the wet blanket himself. All right. Thank you, David, for your insights. As always, enjoyed the chat, and thanks to everyone for listening. Don't forget to sign up for David's newsletter, which you'll be publishing here just in a few hours, I believe. Bitcoin.com/newsletters. The best 5 minutes you can spend in crypto. Get it all wrapped up there in 5 minutes. And yeah, see you next week on Token Narratives. Adios.